All right, ladies and gentlemen. So we've got the man, the myth, the legend here today, Red Dog, as he's known, Scott Redler, chief strategist. Is that right? At T3?
Yep, chief. I think it's a chief strategic officer.
Okay, so chief strategic officer. They got that. The CSO, as it were.
Yes.
Well, listen, man, it's an honor to have you. Have followed you for quite a while in trading. And just really excited to introduce you to our subscribers and viewers, and go over some of your more famous and reliable strategies today. So, how are you doing, man? Good to see you.
I'm doing good. It's Monday. It's a nice long weekend, and market's moving, and getting ready for the fourth quarter, which typically could be a trader's best quarter. It all depends. It's not like the calendar's really behaving that well, and you can't depend on it because just the new world we live in, but all is well. Feeling healthy, feeling good. How about you?
Fantastic, man. Doing well, doing great. So you got kind of a glow about you here. Now I was kind of peeking in on your Twitter. It looks like you spent some time out in Colorado. Was that with your dad, or what was going on?
Well, my dad turned 75 during the pandemic, and my brother 50, and he always wanted to do like a city slickers type of vacation. So I booked a place in Colorado. The three of us met there. We were there Thursday to Sunday, did a little horseback ride, a little fly fishing, little bit of everything. So it was pretty cool. And cool. Just then I got to run the trails out there myself, even though a lot of altitude, because I've been racing for like 20 plus years. That's kind of how I just work the stress off, right? As trading, every now and then you have a little bit of stress. So I like to do fitness. So one of the things I've been doing lately the past few years is I do these trail Ragnar races. So in 3 weeks, I'm heading to Austin with 8 guys, and we compete against 250 teams running through the desert. So that's kind of, I don't play golf. So that's my release and my way to, just balance out work and play.
Yeah, you've always been an active guy. I think that's really cool, man. Why don't we run with that a little bit? Like, I'm curious, where did you pick up on that? Have you always been kind of an athletic guy from a young age? Did your dad push you? Because I'll be honest with you, you're one of the more disciplined guys that I know in this industry. Always taking breaks for workouts and things like that. Always making time for your family. Where did you learn that?
I always advocate a process. Everyone's process is different. I've been to so many seminars, I've given so many lectures, doing trader conventions in Vegas, trader conventions here, and everyone's looking for the magic chart pattern, the magic software, the magic this formula. For me, I think the reason why I'm successful is just because I have a process that I trust and that I like, and it's disciplined. It's disciplined from everything. Listen, I grew up in Syosset where we were pretty house poor but neighborhood rich, where my parents wanted me to be in a better situation than they were in. So they wanted me to be around my friends who were, doctors and lawyers and, this and that, their parents, not them. When my parents came, my grandparents came from Europe with nothing. So my dad was a hairdresser. My mom worked for Avis. So I started working probably when I was 13 as an omelet man at El Torito, to go to a busboy. Then I was the waiter. Then I was the bartender. So I've always done a gazillion things, because my friends wanted to go out. They asked their parents for money. For me, I had money in my pocket because I was out working. I think I even had a paper route.
So that was instilled in you from a young age then?
Yeah. So I feel like, everyone has a process, and what I used to watch with my dad too, is my dad would wake up 5 a.m, walk the dog. Then he'd go, to work, do hair all day, come home, have dinner, then go around the neighborhood and do more hair, then come home at 11. And he always was doing something to, better the situation. So, I would always call him the workhorse. And one of the chapters in a book that we wrote, I was called the workhorse because I'm up at 4:45 and I'm looking overseas all over the world to figure out what the complexion of the day is. As I also know the macro narratives of what the TVs are obsessing about. Last week it was China and Evergrande. This week it's going to be about the debt ceiling. So, I'm always looking to see like what region of the world is leading what. And the last few weeks, China was a bit of a headwind. So anyway, and then I go through hundreds of charts and do videos, and so like every minute matters in the morning. We're on a strict schedule where by 8 o'clock I have to have already marked up 30 to 35 charts. I like to do that in the morning because some people do it at night, and a lot of things change in the morning. So I want to give everyone actionable as approach as I can based on what the futures are doing, what the stocks are doing. So that's my chief strategic officer hat. And then I'm also a trader. I make probably 80% of my money by me trading. So I think a lot of people who are in my community like the fact that I'm not just talking, I'm actually in it, because you have the emotions and you have the day-to-day, and I'm going through the same thing as everybody else. Just we all do it on a different level. That's why I also talk in tiers. I don't talk in shares, because to everyone, share size is very personal and buying power is personal. So I use a tier system to show a conviction level, so we could all communicate clearly together, versus someone saying, hey, I just bought 100,000 shares, and the next guy is like, oh, I bought 2,000 shares, or someone's like, I bought 100. So it's all relative. So anyway, so I feel like just the whole process takes a long time. I've been doing it for 22 years, and I think the reason why I've been able to do it for 22 years, not because I'm the smartest guy out there, but I'm probably one of the most prepared, and also I don't have the crazy FOMO where midday, I know myself. So I've been up since 4:45. I just wrote a huge note. I've done an Instagram live. I've done my morning call, and then I've been talking to my alpha team, and then I'm trading, and I'm talking to the media. So I know by 11:30, I'm like a marshmallow. I can't even think. So I put my stops in, all my swings, okay, which is also a system. Everyone's like, oh, how do you leave with stops? I'm like, well, I put stops in where the trade changes for me. So if I get stopped out, I probably would have been out of it anyway. And sometimes when I leave at lunchtime to do a Peloton class or whatever, I make more money because I don't sell into areas, because all I do is have my stop in and then to refresh, and then I can come back around 1:30, trade the close, do whatever I have to do with the media, then do the recap, and then go home and shoot some hoops with my son. But
that's fantastic, man. Yeah, no, you've definitely, I think you've got that process and that routine down pat. Is that something that you kind of coach your followers, that maybe the Redler All Access folks? What would you say to somebody who kind of struggles with that? Maybe they're rolling out of bed at like 8 o'clock, 9 o'clock. They don't really have a plan. How do you find that structure in your life? How do you coach that?
Well, first you got to do a little tough love. I remember being in the New York office, okay, which had, I think, like 20,000 square feet. We had a big boardroom of traders. I'd be in at 6 o'clock in the morning, putting together the morning call, the note and everything. And some guy would walk in at 9 o'clock. Hey, Red Dog, what are you looking at today? I'm like, you're coming in 9 o'clock and you're asking me what I'm looking at today. I've already wrote a huge note that's in your email a half an hour ago. You could have watched 2 videos, okay, to show what I'm focusing on. And you're going to come in, you lazy bastard, and ask me what I'm looking at 9 o'clock. I'm like, get out of here. It's like, come on. I'm a founding partner and owner, and you're showing up at 9 o'clock, and you probably are out with the boys. So, for those guys,
first one to come and last one to leave, huh?
I try to be. Maybe I'm not the last to leave because I'm the first one in, but I don't expect anyone to do things that I wouldn't do. So if someone's lazy and they want me to throw a fish in their boat, yeah, I could do that here and there, but they're not going to have a career because they're going to always be looking for somebody to do something for them.
That's fantastic. And so you guys, are you back in New York, or you're still in New Jersey? How are you liking working, or how did you like working from home, so to speak, or closer to home?
Well, I was kind of fortunate that, I live in Short Hills and we have a Short Hills office. So during the pandemic, I was able to come here by myself and have an office and be able to trade and be able to communicate with the alpha team and also write all my content. And that's how the 630 Club started, because during the pandemic, people weren't out at work and everybody wanted to trade. And like, oh, Redler, even guys from Short Hills that were hedge fund guys sitting at home that don't trade actively, they're like, what are you looking at today? There you go again. What are you looking at?
So you got
today?
A shorter commute then, huh?
Yeah, literally like 2 miles away. So I was coming in here. I was getting more done instead of commuting, an hour and 15 minutes to Lower Manhattan. I'm here within 4 minutes. So it turned out really well. Very fortunate to have had it. I know a lot of divorces happened during the pandemic. Way too many people were not leaving their houses and had too much together time. Not saying that would have happened, but I'm very happy that I was able to come here and have work is work. Great. And then home is home.
Good stuff. Yeah, well, we certainly hope that doesn't happen with you guys. You've always been, or put yourself out there as a great family man, a great dad. And it's really inspiring. I think it's really inspiring to a lot of people. Yeah, why don't we talk a little bit about your trading style? Why don't we go ahead and jump into that, and then maybe we'll talk about, pick a couple of strategies that you just couldn't live without. If you were trapped on on a lonely island and all you had was a laptop and Elon Musk's satellite internet, you know, you had to take these two strategies with you, what would they be?
Well, I would say, first of all, I'm very focused on moving averages. So I actually have an ebook, which I'm not advocating this for free, but the first, I think,
No,
book I
great.
ever
That's
wrote.
good stuff. And we'll get access to that and put it in the notes.
So I like to follow the moving averages because it helps get rid of opinions. You know, I talk about the 8-day, the 21-day, the 50, the 100, and the 200. So we can go right to the S&P and show you a little bit about my process, because when the 8-day breaks, which is the active trend, which is basically the trend I live by, if we're above the 8 and 21-day, I'm usually in like 20 positions, massaging them using a tier system to add cash flow, but also net money. But when we break that 8 and 21-day, like we did a week ago, you know, all of a sudden I'm from 20 positions to 6 positions. Then all of a sudden we're below the 21-day. Maybe I'm into 1 or 2. And then I also have some shorts on. So I always
say we pull that up.
All right. Do you see the screen?
Yeah, there you go.
All right.
Fantastic.
Well, you know, so one of the things that I always say is like, because obviously you always have a lot of doomsday guys out there, right? Everyone's like, oh, we're going to get that 15-20% correction, or this isn't going to end well. I'm like, well, this isn't going to end well isn't a trading plan, first of all. But in order for it not to end well, what it has to do is stay below the 8-day first and the 21-day. So if you take your line here, if you remember, you know, right around here, you know, you kind of could have reduced your risk right when it broke below the 8-day, which was right here, right? And then if you didn't do it then, you had a retest where it opened above and then couldn't hold the line. So right there, that was a very easy spot to reduce some risk, right? We were above the 8-day this entire time from, you know, from back in, what was that? That's August. And then finally broke below it. So if you got out of the way or reduced your positions when this broke to the downside right here, you know, and then it created a bear flag, right? And now all of a sudden it's below the 8-day and the 21-day. So it's getting like kind of more bearish. And then what did it wind up doing? It wound up holding the 100-day. Okay, so at this point, everyone's mapping out levels. I remember talking to CNBC. So if you reduced risk here, or maybe even got short, everyone's like, you know, if you came in on that Monday super long, why would you be super long when all of a sudden you had your first initial break, then you had a bear flag continuation on a Friday into that? So
now, does this play into your tier system here? Are you just kind of leveling down, or what's going on there with your positions while you're watching this happen?
Well, I'm reducing ones that are showing relative weakness beforehand, because maybe some names broke the 8-day before the spies actually broke the 8-day. So if they're showing relative weakness, they're the ones that I got to get out of the way fast. Same way, if all of a sudden, you know, you're down here, okay, and you test the 100-day, now you're 5% off highs, which is a level. So, you know, in order to be down 7 or 10% off highs, the first stop is 5%. In order to get to the 200-day, the first stop is the 100-day. So that was, you know, the point of reference there. So if you want to say a tier system, so maybe, you know, all of a sudden, finally, when the spies went to fill this gap, all right, which is still below the moving averages, you're looking for names that are actually, you know, close to all-time highs. So a lot of guys made like some decent money in Snap.
So you're looking for relative strength on that bounce there. Is that what I'm hearing?
Right. So right now, if all of a sudden you like, even if you thought like kind of what I thought, I'm not sure what's going to happen here right now. You know, you have this descending trend line. So you figured the breakdown to the, you know, the oversold level, and then you get your active bounce. So now you're still not out of the woods, right? You still just basically went from, like, I use an oscillator, which shows me how oversold or overbought. So down here we were minus 40, I mean, very oversold, hard to be, what's it called, short. And now into here, we're probably plus 20. So into this spot, you know, you maybe a buyer for a bounce, and then, you know, you want to see if the market could prove it could hold up. So right here, you know, I draw a line like this. So now I'm like, okay, can the market prove to go sideways here, okay, and digest versus just an oversold bounce? And if it did it, then maybe it clears this and starts heading towards the all-time highs like it's done 8 other times after a 5% correction this year. But
Gotcha.
if all of a sudden it gets rejected here, starts to turn lower, hey, you know, maybe it retests the 100-day or finally goes into the phase of not necessarily not ending well, but maybe 5, 7, 10, 12% off the, you know.
But either way, you're kind of in a position of what would you say, caution? Not necessarily defense, but just kind of caution. Maybe just not really employing a whole lot of cash, but
when we're below
whatever's
the
working.
21 day, when we're below the 21 day, I'm definitely more tactical. And what do I mean by tactical? High levels of cash. I'm looking just to take trades. It could be for a minute. It could be for a morning. It could be a day and a half trade. I'm mapping out levels where I think they can go prior. So I'm not just adding too many spots that resistance. I'm looking at where's the easy bounce, where's the rubber match spot. You know, like if you look back here, this is like the easy bounce, right? Now this is the rubber match spot. So if the sellers want to take control, they have to reject price here in order to potentially get, another move back to where we were last week. If they can't reject price and we could digest in here, chances are, I'm putting more risk on as it takes this spot out after a little bit of consolidation.
Gotcha.
So,
yeah. It looks like
when
the
we're
SPY is,
trending, at one point, I think in, the first quarter of this year, I was in like 44 positions, like Red Dog, why, how you know? I'm like, well, things are trending. They're above the 8 day. You're able to add to them, take them off. And, something closes strong. It either opens up the next day and you could sell some, or it opens, closes strong or this day you could come in and buy it to go green, kind of like a Tesla, right? Everybody was saying to me, oh my God, Tesla closed so well on a Friday. I'm like, yeah, it did. Okay. So in a sea of red, when something closes with a wide range igniting bar above a pattern, that's the first thing you go back and look at. Especially if it's not down because of, news pertaining to the company, just because you have this rotation now where you think the banks and the cyclicals and value are going to go up and tech's going to get beat up because yields are rising. So it's putting all these pieces together, which is the only way you could do that is if you're up early preparing for it. So anyway, this is Friday's candle, but if you look at today, it went from red to green and took this out, and now Tesla's at 790. That was a great cash flow trade on top of a concept, which is if you want to look to buy something to go red to green, you look for something that was strong the prior session, and that was Tesla.
Yeah, fantastic follow through on that Tesla this morning. What's interesting is I look at this Tesla chart, and I don't know if this would qualify for your red dog or reversal or not, but I'm looking at that big wick there about 2 weeks ago.
This one?
Yeah, where it started above the low there on the prior red day, came down and then came back up. Do you want to talk about the red dog reversal? Is that something that
yeah. I love the red dog reversal.
any of those popping up here lately during the volatility we've been seeing?
Yeah, well, I'm trying to. That's when it happens. A lot of people, look to catch a falling knife, or they're just buying. Oh, it can't go lower. It can't go lower. Yes, it can. So I developed the red dog reversal as a way to give you a calculated entry into a situation and defining your risk. In order for something to be down for 4 days, what does it have to do? It's got to get below the 3rd day low and stay below it. So that's the battleground area. In order to go down for 5 days, it's got to get below the 4th day's low of the day and stay below it. So that's why you key on that pivot, the prior day's low, because that's the actionable fight area. This is probably not a great example of a red dog reversal because it's hard to look at the range. It was so far down.
Yeah.
As I'm looking through this chart here, I'm trying to see what looks. Usually, there's a lot of red dog reversals with.
Wonder, do we have one on AMD recently?
Well, like you could say, kind of here. Okay, this is your pivot low area, right? So this is whatever that low was on that day. What was the low? Like 570. So this low area was 570. So after a big move from the 700s down to here, this was a fake out. I don't know where exactly it started, but it went below this level. So people are probably like, oh, it's going to go into the 400s. Well, if it was going to go into the 400s, it had to get below and stay below this 560. So instead, it went below it, couldn't stay below it. So right there, that was your buyable area. And then this low becomes your stop. So that's 546. Okay, and then from here, you had a nice, this was a nice oversold bounce. Plus, I like to take a little bit home overnight. So if you bought it here, you made some money day trading, then you had a little bit of a gap up. So typically it's a way to catch a counter trend move. Same way here, you almost had a red dog reversal top where look at the move from the 500s. Then what did it do here? It went above a prior high. Okay. Squeezed some people out. So after 1, 2, 3 on the 4th day, you could have shorted here when it put its high in, came back below it, put your stop there, and then all of a sudden, you had a day and a quarter trade to the downside. But at least if someone was just trying to pick a top, oh, I'm shorting it here, oh, I'm shorting it here. By the time it reversed, who knows if they were able to stay with the trade because they were trying to anticipate versus let it put the pivot in, come back below, and then see what happens.
Got it. So quick question on that. Is it okay if, for example, that red candle there, if it opened up slightly higher than the prior day and then retraced into it, would you still qualify that as a red dog reversal? You'll still play that?
It's a different type of reversal. It's like
Okay.
some people call it the gap and trap, where it
Gotcha.
opens above it. So then I'll say, so these are part of my sell rule. So if you happen to have been long on this day because it closed so strong, I always take a little bit off into a gap in my favor. And I have to say, if you're long a stock and if it can't hold a prior high, that's another sell rule. So one sell rule is you sell into some strength if you took it home the day before. Another sell rule for me is if it can't hold above a prior high, that means it's not strong enough to have another day up, so that you reduce a little bit there. Then sometimes it goes red, you reduce a little bit more, and then you figure out if it's buyable lower because you just sold it higher. But that's a kind of a different way to do it, because this, just say it opened up here, came in, you could still then short it versus that 5, 15, 30-minute low if it happened in the first half hour of the day. And then typically you get a little confirmation, that it's weak if it doesn't hold a prior high, because people look at that and then all of a sudden you had the down, the down session. So
Gotcha. I'm curious, have you got, now you said something like there was a potential Apple red dog reversal a few days ago. I remember seeing that on Twitter.
let's see.
Not sure what day it was, maybe end of August, or was it maybe just a few weeks ago, like this September 14th-ish? Maybe that bounce off of the 20 or the 50.
This wasn't really a red dog reversal. This was more of a red dog reversal.
Yeah, that one right there. What date is that, Scott?
22nd.
22nd. Would it be possible down on the bottom left there to pull up the intraday? I'd really like to find out, like, how when you're watching this intraday, do you actually pull the trigger off what you see, like on a lower time frame, 5 minute, 2 minute, 1 minute?
Well, what you could do is, some people like, hey, first of all, this is a perfect candidate for a red dog reversal, because look how far it came in. It broke this upper level. Okay. If you remember the breakout that was happening, it did a false breakout here, right?
Yeah.
It was trying to hold higher, broke this level. I think that was on the Epic News. And then all of a sudden couldn't hold this prior breakout. So right now, this is considered a false breakout, which is pretty bearish. So you get a little more cautious on it. So you want to be very meticulous with a red dog reversal. So anyway, after coming in from 156 all the way down, and now this is the low here. This low is 146.91. So that would be your important pivot. Let's see if I can put this in. Yes, 146.91. So the way I would, you set the parameters, 146.91.
Okay.
I think there were better red dog reversals out there, if I remember, because that got a few people long. So right here, that's 146.91. That's the pivot. Okay. In order to go to 145, 144, 141, it's got to get below and stay below. Okay. So what did it do here? It got below it, didn't stay below it. So once it reclaimed 146.91, okay, then you're buying it. You put a stop here at 146.37. So you're only risking 60 cents, really. And then it wound up giving you, a trade back towards 149. So that was a decent 2-point, trade. And then obviously, unfortunately, it didn't have any upside follow through. It created a bear flag here, but gave you a way out on this candle. You knew that this wasn't strong enough to hold it. But all in all, though, for the day trade, after falling 1, 2, 3, 4, 5 days, that 146.91 gave you the pivot to use, and then you could have put your stop in there at 146.37.
Would it be possible to look at the intraday? Are you actually watching the intraday when you place those red dog reversals?
Definitely. I love them when they happen in the first half hour, because just like everybody else, I love immediate gratification. Sometimes, it happens at 10:30, or sometimes, remember that rally? Remember this rally? This was like what was that rally? That was at like 3:20 in the afternoon. What day was that one? That was here, I think.
Later in the day.
When they asked, remember when the SPY?
Wednesday, Tuesday.
No, I think it was this day. It was the Monday when the rally really happened at 3:20. That was, anyway, a lot of people got caught short.
Yeah, I remember that.
You had the start of this. But so let's see if I can get you the intraday here. Sometimes when I look at it like this, I'm like, this looks more like a doji, where you're kind of in the middle of the range.
So you're looking for it to close up.
I'd like to at least show some power and close above the prior low. So it shows like that the bulls took over versus just being a choppy trade where maybe it's, a little oversold, even though it did wind up, giving you another trade here. So this would probably be, a better example. It got below the low here, whatever that was on that day. Let's move this out of the way here. So move now. So like, what do you have? The low of this day was, Brandon, how do we get rid of this or move this out of the way? Because I can't see what the low of the day was.
Too little.
Yeah.
So, okay, yeah.
I mean,
All right, so here, so this, the low was 85.68. All right, so that's the pivot coming in, and you were just down for 1, 2, 3 days. So when you're down for 3 days, you could be looking for some type of oversold bounce trade. Okay, so basically, when it goes below this, you're waiting for a few things could happen. All of a sudden the futures continue to go lower that morning, and this doesn't make a new low in the morning. And then once the futures bounce, then you get a lot of conviction that the stock just showed you relative strength after being oversold. And then, so you'd be buying it versus that. Let's get rid of this again. And then all of a sudden your stop now is 84.24.
Got it. So you're looking for a move back down through that third, fourth, or fifth down day, and then
Right here,
coming back up through it.
Exactly. And then typically what could happen, could create more trades. Okay, so first you get your day trade when it usually reclaims at its fast. So you can use your tier system where just say I don't know, your tier 1 is 500 shares. So when it comes off the lows and shows some relative strength, you could be in like 500 shares saying, I don't want to wait till it reclaims 85.68 because you're waiting for like $1.40. Some people I can't buy something $1.40 off the lows. So they cheat a little bit. Sometimes it's good because, you're anticipating you're really in there. And sometimes, it makes a new low and then you just have to have enough discipline to stop yourself out.
Got it.
So just say, you bought 500 shares at 84.5 or 85 even because it was showing some relative strength. Then once it goes through this 85.68, maybe you're adding another 500 shares. Okay. And then all of a sudden it goes to 86. You could be taking off 500 shares and booking some money. And then, right now it's let's just say going as high as 87. Maybe you're now down to 300 shares and you're like, okay, I'm going to take 300 shares overnight for follow through. Okay. So what happened the next day? It didn't, I don't know if it opened, higher or lower that day, but if it opened lower, some guys would then buy some more back because they had 1,000 intraday, only took home 300 because they didn't want to risk, what happened the prior day. And then on this day said, oh, I'm going to buy more versus 84.29 because that's our point of reference. So maybe you're buying, another 300 or 500 shares to go green, then it goes green. So now all of a sudden you made money on the next day when it goes from red to green. And then all of a sudden, the prior few days it goes up and then you figure out where your swing wants to be. And you could also be a buyer here when it takes out these two highs here, because anyone who didn't cover their short at 85.68 is now thinking, oh, wow, could be a new trend or a new sequence. I call things active sequences. So trade 1 could have been, the day, the red dog reversal. Trade 2 could have been buying it versus that low. Trade 3 could have been taking this area out, and then you just made, you just had a lot of different tactics and techniques working for the same stock in the same sequence, and that's how you could make a lot of money in like a 2 to 3 day time period if it behaves that way.
That's fantastic. I mean, that's what I love about this strategy. Now, when are you taking profits after that day 2, 3 that you added on there?
Well, I have a thing called the day count rule. So usually like a day 1, I'm in. It's like, here's a potential day 1. Okay, with the red dog reversal. Day 2, typically if it's going to be special, it's either going to open up and pay a little bit, or it could open down like this, and that could give you the opportunity to be patient and add to it. Okay, and this would be like a day 3, but because it cleared an area, I wouldn't be so worried about it because it just cleared. So on day 4, I would probably be getting down to like 50% of what I had, and then here I'd be lucky if I'm still in anything.
Gotcha. So you're kind of hitting those highs from a couple of weeks before, It's
Right, and
giving
then
you
if
a
you got
good,
out of, so if you use the day count rule and you're never buying after day 4, day 5, you didn't get really caught in the slop. And then a new
gotcha.
trade kind of developed here when it took out this prior pivot.
Okay.
And then boom, look at that size of that move. That was, I think that was like right around earnings time. But
That's fantastic. So, and then the other thing I'm noticing there, what is that blue moving average you have right around 84.29, 85.68, that area? Is that the 50?
I think this is the 50 day. So I remember this. So basically, here this trade changed. I remember this active sequence changed on this wide range bar that engulfed this range. And then it got below the 8 day. So again, if you get out of the way when it breaks the 8 day, you could try it when it retests the 50 day. So now you have a 50 day and a red dog reversal. And then right here to reclaim the moving averages. So that gives you some confidence. That could also give you more confidence in just taking out the pivot. And then all of a sudden, you had a huge new trend above the 8 day. And then another strategy is it takes out a prior high here. That means it's showing strength.
Wow.
So there's a lot of things happening here. That's why, you hear traders talk about AMD very endearing, because there are not a lot of stocks that had these kind of active sequences that made it easier to hold and very profitable to use the tier system with. A lot this year has been pretty choppy and misdirectional and not the easiest to find continuity. So when you could find something that trades with continuity, you try and stick with it. Like same way, even with Tesla. Last year was Tesla's year. This year, Tesla's been choppy and you had to be kind of perfect because stocks need to consolidate big moves. So like you go back to AMD, AMD had this, remember this big, awesome pattern? It was in a channel for literally for so long. And then finally on earnings, it took out this channel. Right. So for a year, it pissed a lot of people off. And then finally, it held higher and broke above this whole big action area. And now, at this point, it's trying to prove it could hold in there again. Actually, AMD went green today, but ahead of NVIDIA. NVIDIA, for some reason, is lagging today. You'll see that tomorrow. But now, this kind of has your pivot low. And now this is kind of your rubber match area, right? Right back into congestion. So that's your easy 4-day bounce. So now if AMD could just hang above this spot, maybe for a few days, it could then give you another trade. So right now, I would say traders would love to see a few inside days and then take that out.
Love how you dissect these charts, Scott. You're like a surgeon.
It's fun. Well, as technicians, we kind of, it's like a doctor goes in and reads an MRI, or a doctor goes in and could, take a look at an X-ray. Oh, you have a hairline fracture here. Oh, that's a big break. That's what we do. People who learn technical analysis and charts could look at a chart and just like just like an X-ray, figure out, oh, look at that. It's below the AIM-21 day. It's not strong. Oh, look at that choppy mess. Look at all those gaps. That's not good to trade. We can look at that beautiful trend. You could buy it every time at the 8th day, and then it consolidates, and you could, even buy high and sell higher, which sometimes doesn't happen.
And that's all about that preparation you were talking about earlier, and having a pulse on the markets, having a plan.
Yeah. You have to have a pulse in the plan. You need to know the speed, where the money's going. Like, that's why a lot of people have trouble over the summer. They're on the beach or in the mountains, and they're like, oh, I just came back to the office. Let's see if I can make money. You can't just make money just sitting it down on your desk after taking a few days off. Even
Doesn't
today,
always work that
I'm like,
way.
guys, I was, I had held positions. I'm not really, I've been in Colorado on a horseback fly fishing, on Friday. So I'm going to take today's slow. I don't know if they're just going to come in and buy tech to go red to green, or are they going to keep continuing with this new theme and mantra again on, small caps and cyclicals. Like here, first time I'm back in the IWM in a while. So maybe you want to take a look here. Why am I back in the IWM? Because first of all, you have a really nice channel here. Okay, it's been going sideways for a while. There's lots of banks and oil names in the small caps. And now for the first time, the IWM popped above the AIM-21 day. So it's a good spot to get involved. You also have 3 higher lows, and you still have room that if you engage it now in this area, okay, there's a void here back up to the, this would be next resistance, which is like what, 229, and then this is your channel resistance. So if you're looking for alpha for the fourth quarter, this is something that might be a fourth quarter outperformer where, you start getting involved now and look at it, and the measured move between 212 and 232 is like 20 points. So that means, you're going to be seeing something,
Nice move.
whatever, just using my eyes into here. So so now this is a new go-to list sector, perhaps just by that one little signal. So I call that a little change of character. Like maybe we changed character. Now it's got to prove that it changed character.
Great stuff, man. No, that's fantastic. Hey, listen, I don't want to cut into your routine too much because I know it's midday here and you gotta jump on that Peloton and get
Well,
some
I don't get to
sweat
talk to
going.
you that often, so I could change it a little bit. I'm a creature of habit, but I could massage them like I massage stocks a little bit too. What time is it? It's 12. We're okay.
Yeah, yeah, man. No, this has been great. So let me do this. Let me just jump back to the video here and let our viewers know where they can find out more from you because this is fantastic stuff. And we're all about education here. And we love to put guys like you who are just quality educators, care about their customers and teaching, just quality teachers. So how can we get in touch with you? How can we find you?
Well, anyone, you could email me if you want, scott@t3live.com. So sometimes like what I do is I do a 6:30 club on Instagram and Twitter, and people find me there. I'm like, just email me and then I'll put you with a trader counselor who's part of our team, which will try and figure out what's for you. Do you trade all day long, and want to be at the screen all day? Then we have like the alpha team where we have 500 plus traders trading all day long, speaking, seeing positions, hanging out. I play music in the morning. We sometimes have happy hours. So it's like your own trading firm, but it's from everyone around the world. So it's awesome. And then sometimes like, hey, you know what? I'm a doctor, I'm a lawyer. I can't be in front of my screen all day long, but I want to know what's maybe the new sector, what's the new trend, what's outperforming. Then usually the Redler report, which is the note I get every day, is pretty actionable. And sometimes there's day trades and sometimes swing trades where like I can't look at a site all day long, but I just want to read your note every day. So that's like the Redler report. So typically those two things. And then most people, I think, that have the most success have both of them because there's lots of different ways to take it in. You can take it in by reading it. You could take it in by the 30 charts I put on my private Twitter sphere. I put a lot in the public Twitter sphere. I try to add as much value as I can until, my CEO yells at me for giving away too many things for free. But you can find me, on Scott Redler, Red Dog T3, which is my public Twitter. And then, after a while, when people do watch the public for a while, and if they really make money, they're like, okay, how do I, get a more intense version of this? And that's the Redler report and the alpha team. But there's also free stuff out there. You could, Google Scott Redler.
We're definitely going to post a
moving
lot of your
averages.
ebooks on here for sure.
Yeah, like those are no joke. Like they're all within the last year or two. A lot of them are the anatomy of what took place. Like I just to leave you, like I never really traded Bitcoin. 2 years, I missed the first move in Bitcoin from like 1,000 to 18,000 or whatever.
Yeah.
So then coming into December, I've watched it since, and I've had to talk about it on CNBC even when I'm not in it. So I was like, I'm like, I like this chart pattern in Bitcoin. We can even go to Bitcoin. What's it called? Back in December, it was like right around the double top. I mean, right around that 20,000 area. Mm-hmm. So I said to my wife, I'm like, I'm transferring over 20 grand into Coinbase account. She's like, what are you talking about? I'm like, I'm transferring over 20 grand. I'll even use numbers. I'm like, she's like, why? I'm like, because A, I think I can make money, and B, cryptos are just getting so in favor that I want to see if it works with technical analysis. And here, let's put Bitcoin up.
Here, let's throw it up here. I'll throw it up here for you.
Understand? And Bitcoin wound up working out like so fantastically. If you go look at Bitcoin, go back to December when it took out, when it took out 20,000, it literally was above the 8-day moving average from 20,000 to 41,000. Like you could, it's from this year. And so PS, my Coinbase account tripled. Okay, and I'm probably 1% off my highs, if not more than that. And I'm not a crypto expert. I fully used everything that I use between the tier system, the moving averages, the sentiment indicator. I don't know if you remember, but when Bitcoin put its top in, that was when that Grayscale commercial was on 20 times an hour on CNBC, going right into the Coinbase IPO. So right there, you had to think a little bit that it's a little overheated. So putting all that together actively, which I also had in my note. Sometimes I have Ethereum in there. I've had some altcoins in there. I just as what started to be as like a little experiment wound up making me a lot of money, made a lot of people a lot of money because technicals could work on any asset class.
Gotcha. And that's your ebook on Bitcoin, right?
Yeah. So I just showed the whole year. I could, you could go back right to like December 14th and look at where it took out what's it called, 20,000. And
Yep.
then the first move was all the way up to like 40,000. And look at it above the 8-day the entire time, right? So so
It
if
works.
you were
Works
trailing
on
right
anything,
here,
right?
yeah, the here's extended. You reduce a little bit at the top of that little doji. Then it puts in another wedge pattern, reclaims all the moving averages around 36,000. So that could have been your rebuy. You know, if you go like to, you know, in February, yeah, you could boom right there. And then when it took out the prior high, you know, that could have been on that big wide range candle. That could have been another ad, which it was. This is what we were doing. You know, go right across. Even that's even better. Or you could have done it from the peak. So right there, those could have been. Bitcoin just proved by holding those moving averages and reclaiming that you know, that it's worthy to stay with. And then you remember the head and shoulders top pattern that came in, you know, over May. If you move along, you're a pro right here. You're doing your thing. It's boom, right? Look at the left shoulder, the head, the right shoulder, and then look when it broke the moving averages at 55,000. I went to 90% cash in my crypto account because Ethereum was leading and Bitcoin wasn't leading. So right there, that put something in my head, and then all of a sudden, lost that 8 and 21 day right around 56,000. So if you got out there just like a stock, okay, you were out of the way for the 56,000 down to the 30,000, and then it created a new base and broke a downtrend and went back into 75% crypto or so.
Nice.
So, you know, so it went all the way down. And then now you see the new base that started, and then all the way right when the big guys spoke, you could draw a line. You know, when it took out, I think 32,000 is when I put on some crypto exposure again. You could draw a downtrend from you know, just from the highs of this lower channel to when it took out 32,000, somewhere around there. Yeah.
Somewhere in there.
Yeah, somewhere like right around there. And then you could draw a line of support going sideways from the 28,000. And then what did it do? It followed the 8-day all the way up to where you had that wide range engulfing bearish bar around 51,000. And that was just, you know, 3 weeks ago.
Nice.
So held. And then right there, you go to the candle, that big red candle, September, whatever that was. And that's kind of your invitation to get the hell out of the way. You know, first candle like that in a while after a big move. Then it broke the 8 and 21 day, and now it's back in rebuilding mode.
I love it. You know, and I love how just repeatable this is, this system that you have. Like, I mean, we just went through this on AMD, and here we are doing it on Bitcoin. So,
right, any asset class, you could use technicals and then use your process on risk management. And
good stuff.
It's all different for everyone. Don't be ashamed or upset if your tier one is a lot less than someone else. I guarantee you do this for a while, your tier system will go up, you'll make more money, and your process will just evolve. And that's what you do. You know, a trader who's trading for 1 year isn't the same as someone who's been trading for 5 years. A trader that's been trading for 5 is in his 10th. I literally, you know, I've been doing it for 22 years, and you know, my breakout year was during the pandemic because I lived through the financial crisis and traded it through it, and I did the same thing with the tech bubble bursting. So by my experience, I was able to use the moving averages and be out of the way when March hit, and then start again when we were 30% off the highs. And then the most important thing is, remember, everyone got really bearish, you know, after the first 10% bounce, that we had to go back and retest the lows. And PS, I don't think, you know, we've had more than a 5% correction since.
Good stuff. Well, hey man, thanks so much for making time. It's been a real honor, getting to speak with you.
Thank you. Well, I'm just, you know, it is what it is. You know, we're all doing this, you know, we're all just trying to help each other out. And
yeah, and you know, that's what I think, that's what everybody loves about you, Scott, is that you're really down to earth, and you know, you speak to everybody like you know, like they're a neighbor. So
right,
appreciate it. But you know, inside that humble attitude is a lot of wisdom, and so I appreciate you sharing that. And we'll throw up some of the a lot of that cool free material, like the Bitcoin ebook and moving averages and things like that. So a lot of great value there.
I appreciate it. Thanks for taking the time also. And we'll do this again in the future.
All right, pal. Have a great one.
You too.